With that, may I now invite Dato Muzaffar Hisham to present on the question: are conventional banks worried about their future, and should they be? The floor is yours, Dato.
Actually, Gerard was correct. This pavement is pretty high. I was hoping for the band because looking at Daniel's presentation just now, I think I'm going to have an idea to present to my board or to the AGM in the future. We should have a band each time in an interval. You know, when you start with the Earth, Wind and Fire, I think that's the right start for the ASLI event. Then I bet you my chairman is going to whack me a bit. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First and foremost, thank you very much, ASLI, for having us as a distinguished panel guest and the sponsors for this interesting event. First and foremost, I know it's been past a year or so for post-COVID. It's always very nice to see a crowd of people in a room. I must admit, it took me a while to adjust when working at home because you're not interacting with people. It's very difficult. The topic that was put forward to me in the future of banking, are we worried? Yes, of course, I am very much worried. I am today thought of giving more of a sense of from a wholesale capital market perspective. I noticed from Dr. Apruva's, Professor Yes today, given a bit of alphabetical keywords, the 3S, 6Ds. I thought I might as well provide a 3Cs as well for today. It wasn't planned. It was in my speech. It was a very well-known CFO of a bank 15 years ago was telling me of how we navigate our financial industry. And he mentioned to me, if you manage these 3Cs, we should be able to navigate it quite well. And I thought of taking a step back for all of us here, going back to certain fundamentals and being pragmatic. And the 3Cs are, in not any particular order, how do we manage our capital? How do we manage compliance? How do we manage costs? If you look at it and if you reflect, in any parts in managing in a banking, be it a bank like us in Maybank, or a bank in any high street bank, or the digital banks, these 3Cs somewhere, somehow, we need to navigate it. If you look at it, the last couple of months or this particular year, if you see a lot of the data regarding our foreign currency, the high interest rates and so forth, one thing that remained intact and not a repeat of 97, 98 or 2008, 2009, that the banks are well capitalized in managing its costs and its compliance as well. And if we're not disciplined in our compliance, you will see some of our fellow banks as well can hit hard. And we shouldn't take for granted of these 3Cs on these fundamentals. I thought of adding another C's now as we are going in navigating ourselves in the future. And this is competition. To me, competition is very much welcome. Competition will make us efficient. Competition would drive us the innovation that Dr. Apruva has mentioned as well. And this is the part that I thought of maybe food for thought for this morning as well. How do we look at that competition landscape? How do we navigate ourselves in that sense? And Dr. Apruva was right. I mean, we don't go back and we talk about what's our CAR ratio and our TC, total capital ratios, and our LCRs and so forth. But how is that the financial institution complement the overall economy, complement with the growth of the country, complement with the society, complement with the policies of the government, and complement with the community itself. And when I mean complement, the banking institution should complement, not being detractors. Because if we derail in any form, be it in the first quarter of this year when we saw First Silicon Bank and First Republic, the it impacted not only, although it's in the banks in the United States, but it does have a significant impact, particularly to some of you in this room, our treasury and our capital markets to a certain extent. So that complementary sort of navigating of the whole financial institution is key. I may sound a little bit biased and it may sound highlighted here this morning as well. I think one of the key areas that we talk about was ESG. And I really meant by E, S and G. Usually the word E, it can be very, very wide. I would always recommend and focus, we talk about emission first, the social impact, the S, and the overall importance of the governance side of it. But we shouldn't also forget, particularly the uniqueness here in the Malaysian banking system, also in the globally side, the uniqueness of Islamic banking, the complementary of the solution in the Sharia part of it. If you deep dive, and I had that privilege of experience in looking in running that Islamic bank once upon a time, and the opportunity of the various Sharia solution complementing to the economy, innovation is very exciting. And I completely urge that we look at this overall complement part of E, S and G and the Islamic capital market, and going back to that basic that you've seen in the central bank or Bank Negara on the value-based initiative itself. I think we deep dive further, we spend more time on that. I am very convinced that we could come up more and more complementary part of the general economy that I mentioned in the financial institution. And we've seen this over the last 2 decades as well. When the country was growing is its infrastructure. Yes, we take for granted, it came out with a lot of a sukuk of the capital market. That allowed us to fund long-term for our long-term infrastructure projects. The reason we got into trouble in 97, 98, we were funding short for long-term, right? The capitalize of the banks. And over the last 5, 8, 9 years or so, we see the various solutions, though in a smaller scale or a medium scale in the banking sector. The emergence of the investment account in Islamic banks, the solution of rent to own for folks owning homes, and also from solutions to the SME side itself. That we could address these various solutions using the Islamic capital market or Islamic banking itself. Ladies and gentlemen, when we look at digital banking and so forth, there's always this conversation about excess of financing or lack of access, not only in terms of this part of the world in ASEAN or various parts in globally as well. But I would like to, in the conversation about excess of financing or funding, I would like to extend that when we talk about excess, it's also to complete with overall managing the risk. And this is, I notice from time to time in particularly in the SME side, particularly in the individual banking part of retail as well, the access is there. The access, it's available. The access is able to connect that with the emergence of the technology and so forth. But our role also is how we complement that and to provide that to our customers, to the community in managing that overall risk. And I believe with that solutioning technology and so forth, we're able to up the game in managing that overall risk. Going back to that point of complementing the overall solution, not only for us here in this room to make the returns or every pressure of quarterly results and so forth, that is a given. But how do we complement that overall to the general economy? Ladies and gentlemen, in closing, and we're looking forward later for the Q&A, I believe in the next couple of years, there will be interesting crossroads in the financial institution, be it digital banking, be it potential convergence, be it the evolution of other players to the financial sector, or complementing partnerships between institutions and other organizational. And this doesn't mean just corporates, with NGOs, with societal sort of solution. I believe in the next couple of years or so, or immediate term, this is an interesting journey for all of us in this room. Once again, ASLI, thank you very much for this opportunity. Looking forward for the Q&A later on. Assalamualaikum warahmatullahi wabarakatuh. Thank you.